All right. It's Monday, July 27, 2020. And here's a quick look at the U.S. real estate market data that came in over the weekend from Altos Research. Home prices stayed flat this week, which is a solid seasonal indicator. Our spring buying season got extended by a month this year. And so we're now seeing the seasonal patterns that we'd normally see at the end of June. At $355,000, we're a little over 1% higher than last year at this time, and 7% higher than a year ago. The leading indicators continue to be strong for prices, with showing no signs of demand backing off. So, with the exception of that seasonal peak, we don't see any price decrease pressure coming. The new listings price is at 319 and has been flat around the same level for 7 weeks in a row now. This is how we actually know that the transaction prices will be supported in the next 2 months. The new listings price is where we see the current demand for the future transactions. So as of right now, they're not backing off. Normally, they would be backing off this time of year. The inventory story is the same this week. Demand and transaction volume is still higher than the new listings coming to market. So we are seeing fewer and fewer homes for sale each week. The new listings volume is at 77,000 this week, which is climbing and is a encouraging sign, although it's still lower than normal. But it feels healthy because it's inching up. So while demand is still higher than new supply, it was only by a few thousand this week, 6,000 homes fewer. And so maybe we're getting some signs of stabilization in the inventory data. We have been experimenting and looking into the hypothesis of whether the homes for sale in the cities, the big expensive cities, is demand weakening there as people move to further out markets, remote markets where they can work remote. And here's some interesting things going on. This is the Truckee, California data. Truckee's by Lake Tahoe. It's a vacation home market for San Francisco. And there's some real signs in the data. For example, you can see really quickly here, this is the Altos Research Market Action Index, which is at a glance, how's the market? And you can see how it's climbing from last month, just really seeing demand increases, transactions happening more demand going on as inventory decreases. You can see home prices climbing. You can see price per square foot climbing. The price decreases, if you've watched these videos, you've seen me talk about percentage of homes with price decreases as a measure of the organic levels of demand. About 35% would be normal. And we're down to 18% in Truckee right now. And at the same time, we're seeing price increases all the way up to 9%. So price increases, these may be homes that were on the market in, say, early March. They got pulled to see what would happen, and they got lucky that demand was high. So now they're relisting the property at a higher percent. So that's super fascinating. Those are marketing moves to get more for the property. Showing super big signs of demand. If you look at inventory, total inventory over, for example, last year at this time, 260 down to 80. Like there's real, you can see real demand. And then you can see it in the price points too, the market segments. Altos does all the data in market segments. So the high end of the market may be behaving very differently from the low end. And let's move my little window here. But the low end in Truckee, 700,000, 28 days on market. And so you can see the demand is just kicking in super strong. We can, by the way, see that same phenomenon in places like Sonoma County, north of San Francisco. Maybe not quite as strongly as Truckee, but it sure is real. So then the question is, Does that mean San Francisco is cratering? Well, it turns out that it is. Let's show you the San Francisco report. Demand is not cratering, even if it is a little softer. There's a few dynamics of California in general and San Francisco in specific over the last bunch of years that have kept that a lid on that. So we can see, for example, inventory climbing in San Francisco, 428 up from last year at this time of 272. So a lot more homes for sale in San Francisco. At the same time, we're still in seller's conditions, and that's because for a city of 1 million people, just under 1 million people, only 400 homes for sale is super tiny. Compare that to like Charlotte or Austin. Those would have 2, 3, 400% more homes for sale, like 12, 14, 1,600 homes for sale for the same size city. So while you can see some of the demand weakening in San Francisco, it's still, the supply is still ultra low, so that keeps a floor on prices. And really, what you see is maybe the phenomenon of, as Jonathan Miller, my friend Jonathan Miller, coined the term co-primary homes rather than second homes, where people are, the demand for a place like Truckee is way up, but it's a really good time to not sell. It's a good time to own. So keeping your home in San Francisco, if you already own it, you've got a cheap mortgage and a lot of equity, there's no real push to sell that home. So you can see that one of the reasons that record low interest rates is keeping a lid on our inventory, because if you're buying a second home, you don't have to sell the first one. So we are seeing it at high-end rents in San Francisco, where you can walk away from those properties. People are doing so. By the way, if you want to dive into your local markets, you can go to the Altos Research website, altosresearch.com, and hit the run a report button, and then just run one of these reports. Use your zip code, type your zip code, and you can see all the local data. It's free. You can go run that yourself. So that's the quick tour this week. There is more to be seen, and we'll probably cover it in our bigger webinar in August. But more to be seen in the migration patterns and why it's not actually turning into crisis for anyone. It's only buying activity. Really powerful stuff. Okay, more next week. Stay tuned.